Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday video, guys. And it's that time of the week again where we go over the top 5 options plays for the upcoming week. Hopefully you guys had a very nice weekend so far. Now, in today's video, guys, keep in mind that all of the options plays are going to be for selling options, more specifically for selling put options as part of the wheel strategy that I like to run on the channel. If you've been watching the channel for a while, you know that this is the main strategy that I like to run and the strategy in which I devote the most amount of capital on a weekly basis when I am trading the markets. I like it for 3 main reasons. Number 1, it's very easy to understand if you're new to the whole trading game. It's very easy to manage once you're in positions. And lastly, it's very scalable. No matter the size of your account, you can scale it up or down depending on the size of your equity. Number 2 reason I like it is because it's very passive. It requires a low amount of time in front of your screens. You do not have to be in front of your screens for 8 hours a day to run this strategy. Pretty much 10 to 20 minutes per day should do it, which means that you can have a full-time job, you can be traveling the world, you can do anything you want and still have the time to run this strategy. And reason number 3 is because it's a very high win rate strategy, which really helps in building consistency and confidence when trading the markets. So in today's video, guys, we're going to cover 3 main things. Number 1, we're going to go over the expectations for the week. What do we have, number 1, in terms of macro to look out for, whether those are geopolitical headlines that we're possibly going to look out for, or number 2, economic data events to look out for as well. That's going to be the macro preview. Number 2 that we have to look out for is the strategy rules, especially in an environment where we might be seeing more volatility this week than the last week. Very important to respect the strategy rules. So I'll spend a few moments going over those rules just to reiterate them for best practices in trading. And number 3, we're of course going to tackle the top 5 options plays of the week. And as per usual, I do have about 10 extra bonus plays for you. So make sure you stick around to the end for those. So without further ado, guys, let's jump right into the action, shall we? So in terms of number 1, the macro outlook for the week, well, of course, we know that we're now coming into resistance, the all-time high resistance area on the SPY and the QQQs, and we are currently getting rejected. But that is for one key reason. These are the elements that we have to look out for this week. Number 1, front and center, of course, is the unfortunate conflict, renewed conflict between Iran, Israel, and potentially the United States as a proxy. You will want to look out for each and every headline over the course of the week. I will remind you, whenever we have geopolitical conflicts between Israel and Iran, we actually have some data points in the past stemming all the way back from October of 2023, when of course you had the first attack by Hamas on Israel and then the conflict that happened thereafter. This was that event. It did result in a very nice buying opportunity. And when I say buying opportunity, I don't mean to be insensitive to the whole conflict. Of course, it's very insensitive. Of course, it's very unfortunate rather. However, we have to view this in terms of market perspective. Should we be staying in the markets, deploying more money, or staying out of the markets? That's what we have to maintain from this situation right here and how it impacts our trades. Number 2 would of course be the April situation, in which we also had a renewed conflict between Israel and Iran directly. And the last episode was back in August into September of 2024. All 3 of these events lasted a few weeks, from the first headline and the first missiles that were fired to the kind of winding down and peace talks of the conflicts, of course. Now, this time around, of course, since it's the dismantling possibly of Iran's nuclear program, and that Israel has been very vocal in saying it would not just be a one-day attack, but it may be a multi-stage attack over several different weeks. That is the timeline, guys. So this consolidation, this fearfulness, and this uncertainty in the markets as a result of this conflict could last more than one single day or one single weekend. So we have to plan for that in our trades, and we have to line up that consolidation with possible levels that we might be able to obtain to the downside in the market. So this week, number 1 is Iran and Israel. The constant news flow will be impacting the markets, of course. Number 2 is going to be any trade deal updates. We know that we only have 1 month left until the possible effective tariff rates are put back into place. Mr. President Donald Trump said just last week that there might be a possibility to extend the time horizon for that 90-day tariff pause, just to stimulate more favorable and more agreeable trade negotiations, of course. But we know that he kind of wants to wrap it up, as we are now in the last month of the first tentative 90-day pause on the tariffs. So pay special attention to any trade deals. Of course, the trade deals will come as a counterbalancing factor to the Iran and Israel conflict, as the trade deal updates would be a positive impact for the market, as opposed to the Iran-Israel, which would be obviously a net negative unless there is some sort of a ceasefire obtained. And number three, which is also going to be very important this week to pay attention to, guys, is the FOMC. It is the interest rate decision from the Federal Reserve. Now, at a first glance, that does happen on the Wednesday session. We are not expecting a rate cut. You can see the probabilities here are pretty much to maintain the rates at what they are, not only this month, but also into July. Why is this meeting so important? Because it comes with the quarterly summary of economic projections, where the Fed gives its estimates not only for the rest of the year, but into 2026 and into 2027 as well, and that across a variety of different aspects. Pay special attention to this summary of economic projections, especially that now we have more information on the tariffs. I'll remind you, the last time we got this was in the month of March, and we saw a net downtick in GDP. The December projection was 2.1 for 2025. The Fed dropped it to 1.7. Any further declines in GDP will be negative for the market. That's the Fed saying that they're not that confident in the direction of the economy. Same thing with the unemployment rate. It got an uptick from the December meeting to the March projections. It's at 4.4 now. If this sees an uptick, you obviously know what's going to happen. The markets are not going to like that. Same thing for inflation. Inflation was upticked from 2.5 to 2.7 in the March meeting from December as a result of the possible impact of tariffs. If this number is increased again, well, you guys know the markets are not going to like that. And lastly, core PCE, same concept, but largely now you have to pay attention to the federal funds rate. If they did not change this one in December to March, if these rates are higher than what they are, it means the Fed is going to be even slower for those interest rate cuts. I'll bring you back to this table of probabilities. The market is currently pricing in about 2 rate cuts by the end of the year. No more, no less. So if the Federal Reserve pencils in higher interest rates, not only in 2025 or 2026, it lets you know that the pace of the rate cut cycle will be slower than anticipated, and the market is also not going to like that. So pay special attention to this SEP. It is largely going to be the determining factor whether or not we are red on Wednesday or green on Wednesday, depending on the Federal Reserve's projections. Now, all that in combination, guys, we have to understand where the tariff situation, the Israel-Iran situation, and where the SEP situations could bring us into. Bad Iran and Israel updates, bad summary of economic projections, and no trade deals. You are 100% going to go further into weekly consolidation, because that would be a net negative across the board for the week. That being said, the bulls have tons of support down here. 585 down to 575 is a very nice retest of support. That is a couple percentage points away, about 4 or 5%. So we have a lot of space, and the bulls still do control the weekly time frames. So I am confident that if we start to approach this area, it's a great opportunity to be selling puts below the market, below support levels on your favorite stocks. And on the QQQs, the exact same thing. Rejection from resistance right now, all-time high range. If the net negative catalysts for the week, in terms of macro, in terms of headlines, are there to be had, then we are going to consolidate into our lower bound of support, which we just lifted off from about a month ago at this rate. And on the QQQs, that is the same area. 512 down about 499, this 12-point range. So the bulls are working with a lot of space here, and the buy the dip crew will probably be very active, especially at those lower bounds. So now's the time to set some levels, establish some support ranges on our favorite companies, and try to go shopping deep into those support levels, so that if we come down early on in the week, we are targeting levels to write puts under the market at that probably will not be assigned by Friday. But if they are, you are very happy with the strike prices that you've obtained for some of your highest conviction, highest quality companies, guys. So hopefully that's clear. That is your expectations for the week. Now, element of the video number 2, we have to do a recap of the strategy rules, especially when we possibly are facing weekly consolidation, guys. It's very important to respect the strategy rules. Now in this video, what I'll be doing is I'll be giving a very brief 2-minute recap of the strategy rules. For the past 1.5 years, almost 2 years, every single video I spend about 10 minutes of time on the strategy rules. No longer will I be able to do that. I'm trying to optimize the video length and get right into as many plays as possible. So what I'll do is I'll flash the strategy rules on the screen, take a screenshot, but what I will also do is leave 2 links down below in the video description. One for the bear market strategy and one for the bull market strategy too. They are 2 different sets of rules. Largely, a lot of the concepts are similar, similar, but the difference between the bear and the bull market strategy is the ROI per week that we're targeting. Other than that, you guys, if you're becoming recurring viewers of the channel, you guys should understand those strategy rules all the way by now. So these are the bull market strategy rules overall. Take a screenshot right now because I will not be going over them. These are the bull market strategy rules. Very important, guys, to respect. You want to be doing high quality companies targeting weekly support levels and be below the expected move this week. Do not try to get too greedy with this market, especially when we have so many macro and geopolitical events that could be hitting the press in terms of this upcoming week. This is the bull market strategy. This down below is the bear market strategy, okay? The main differences between the two is the ROI that you're going to be looking for. The bull market strategy is a bit more aggressive. It's not aggressive, it's just it's more aggressive than the bear market strategy. The bull market strategy, we're targeting 0.5% per week on our capital, and the bear market strategy, we are targeting 0.25%. Essentially, if you are somewhat a little bit timid coming into this week because of all the things that may happen, maybe you might want to run this strategy for the week and be on the safer side. If you are trying to be a bit more aggressive with the markets and you do not mind possibly being assigned on certain stocks here and there, well, maybe you go with the bull market strategy overall. That is how I would break down the differences between this two this week. If you want an in-depth explanation of every single element of both of these strategies, I'll leave the videos down below in the video description. They're not that long. They are 10 minutes each, so make sure you review them, especially coming into this week. And that is pretty much the strategy rules section of the video. But as of right now, guys, let us jump right into the plays, into the top 5 options plays. And we are going to start it off with company number 1. And company 1 for this week, guys, is going to be Google. So a lot of these companies in the top 5, you will see have been recurring over the last few weeks. Why? Because we're still in or around the exact same areas that I like these stocks. We can keep playing them week upon week upon week until they actually pull away from us and we cannot play them any longer and we have to look for other plays. So the reason that I like Google this week is quite simple, guys. We are still in a very nice weekly uptrend overall, and the bulls have just left a very beautiful area of support behind us. 170 all the way down to 161, a very large area of support. The bulls are going to be able to play some good defense down there. All of the weekly EMAs are sitting in that range too. And as we can see, guys, the bulls have put in a lot of space, which means that if we pull down into this area, we're going to get some short-term oversold indicators on the 1 and 4 hour time frames. Another reason I love Google, guys, is because of the valuation, of course. The valuation is very, very low right now, so I do not mind picking up some Google in the event that we fall down there. The goal, of course, is to just write low enough that we don't get assigned, but if we do get assigned, I want to get the best possible price. So the expected move for the week, guys, is 171.55. If you guys don't know where to find the expected move, it's very easy. Just go on this website right here, barchart.com. Type it into Google, barchart.com, expected move, Nvidia, Google, whatever the stock you're looking for, you will come to this chart right here. Watch the expected move here for this current Friday and try and always be writing below the expected move to put all their odds in the favor of not being assigned. That being said, Google's expected move is 171.55. So we want to be below this, guys, preferably into support, talking about the 170 and below, which would be below the expected move, but also deep into our support range. Let's have a look on Google and see what we can possibly get. So the options chain is right here. As you can see, where are we looking for the bull market strategy is 0.5%. If you want to know how to do the 0.5% rule, right, in terms of weekly ROI in your head, it's very easy, guys. Divide the strike price by 2 in your head. Half of 170 should be 85. You would want to see 85 cents at the bid to be respecting the minimum ROI for the week. As we can see right here, the 170 does not respect the rule, and the 172.5 is a little bit too greedy in my humble opinion, guys. It's a bit too far away from 85 cents, right? A little bit too aggressive for my liking. That being said, the 170s are very close. If Google opens up even the slightest bit of red on Monday, you probably will be able to find 85 cents or better at the 170, right? However, half of 0.5% rule, the bear market strategy, 0.25% per week, is very easy, guys. Just go with 0.5%, which would be 85, divide that by 2, which would be pretty much 43 cents, and that would be the strike that you're looking for the bear market strategy. So that would be the 167.5 strike. If Google, for some which reason, because of the headlines that we've been getting over the course of the weekend between Israel and Iran, if the markets drop 1 to 2% on the Monday session, trust me, guys, this 75.85 cents will then be on the 167s, and these 43 cents here will be on the 165s. You want to be going as deep as possible into this support range, which is 170 down to 160. So be dynamic with your strikes, guys. Don't be static. Just because I'm saying in today's video, I like the 170 strike, well, don't just put that set in stone, right? Be dynamic with the strikes. Follow the premium to the downside and better chances of not being assigned. So at a first glance this week for me, depending on how aggressive we want to be, it's 170 down to 165. If Google opens up minus 3-4% for some which reason, well then perfect. We can go shopping at the 165 down to 160. But at a first glance right now, it's 170 to 165. I want to play within this support area. So that is trade number one. And once again, that is Google. Trade number two is going to be another one of my highest quality, highest conviction names in the market right now, and that is going to be Amazon. So Amazon got rejected from resistance, which was 220 up to about 228, and now we are embarking on a little bit of daily consolidation. That being said, we have some very nice support that the bulls set below us at around the $200 range into the 200-day EMA, which is about 199 right now. The valuation of Amazon also is quite good considering their forward growth prospects. Now, Amazon, full disclaimer, I really want this one between 200 and 190. I would not mind like a 202.50 strike, but truly I want it between 200 and 190 because then thereafter we start pulling into support. You'll notice here that I'm foregoing one of my most essential rules, which is there's not much support over here at the $200 range. The big area of support starts down here, 190 down to 181. That being said, Amazon is one of my highest conviction stocks. And when the markets are possibly going into weekly consolidation, I want to focus on my most highest conviction stocks. If I get assigned on Amazon, I will not mind because it's very high conviction, right? I would rather play something high conviction like this than, forfeiting Amazon and playing something that I don't truly believe in, right? So that being said, the expected move on Amazon right now is 206.69. But as I said, I want to be below that. So as you guys must understand, where the Amazon stock is going to have to come down for us Monday or Tuesday to open up some of those strikes. Let's have a look at some Amazon premiums and see what can we possibly find here in around that $200 range that would respect our 0.5% rule overall, or maybe a little bit less, yeah? So looking for the 0.5% rule, half of 205 roughly is about $1, $102, $100, right? So you're going to be looking for that on the bid. As you can see right here, that would be the 205. That is below the expected move of 206 and change. And the below strike, right, the 0.25% rule would be down here, roughly the $200 strike. So $200 strike is offering the bear market criteria. It's also a 7 delta. If you don't know what that means, it means that 7 times out of 100, you would possibly be assigned on that trade. So it's a fairly risk-averse trade, but the premiums are not so large because we're using the bear market strategy, right? We are foregoing some ROI in order to be much safer overall. So that being said, the strikes that I enjoy the most on Amazon, I will have to wait for this one to come down a few dollars. If Amazon can come down into the 209, 208, 207 range Monday or Tuesday off of some market consolidation, then probably, guys, we'll have access to the 202.50s and 200. I'll be looking to get as close as possible to $1, but if I can get between 60 cents and $1 on some of these strikes, right, 202.5, 200, 197.5, that is where I want to start to play Amazon overall. Hopefully that makes sense. That is trade number 2. Trade number 3 is going to be a pair of semiconductor companies. The first of which is going to be probably the highest conviction company of all semiconductors for me personally, which would be Nvidia. So Nvidia, we know the price action has been very strong, especially since their earnings were coming into resistance right now, 145 up to 150 and getting rejected, and overall being a little bit weak after that Friday consolidation because of the geopolitical headlines. At 140, the stock is not cheap per se, but it's also not expensive by many metrics. The PEG ratio is sitting at about 1.39. The free cash flow yield is not too bad overall. And the forward price to earnings for 2025 is also not too bad. Forward for 2026 is under 30. So it's not crazy expensive, but it's also not very cheap. what I want to be doing, guys, is I want to play the consolidation leg. If the markets consolidate this week and we end up with a bit of a red week, I want to start playing NVIDIA into support, and that support range starts 135 down to about 125. I want to be getting as deep as possible into this support range. The bulls control the weekly time frames, and this would just be looking for a weekly higher low, possibly for further continuation once we are done our consolidation phase, and the weekly EMAs are sitting right down there in the mid 120s. If you ask me my favorite levels, I want to be at 130 or less. NVIDIA usually has some pretty good volatility, but we are kind of far away from 130. The expected move for this week is 137.60. It's not that far away. However, with the VIX that has been coming up recently because of the Friday session, let's go shopping on NVIDIA and see actually, can we get below 135, which is the start of support? More specifically, can we get into that 130 range, which I would really want? So let's have a look at some of the NVIDIA options premiums right here for the upcoming Friday close. And as you will see, right, if we're looking for about 135 or better, you know, 0.5%, half of 135 is roughly what? 65, 70 cents. You can see that we're actually getting 73, 75 cents at the 135 strike, which is perfect. That's the start of support. However, if NVIDIA has another red day starting off the week on Monday or Tuesday, and it drops a couple dollars, guys, well, you guys know what you're gonna do, right? You're gonna go for even lower strikes. If you can find the same 65, 70 cents, however, in the lower 130s, that is perfect. If for ever which reason NVIDIA drops, I don't know, 2, 3, 4% on Monday or Tuesday, well, then maybe you can find that on the 130 strikes. So for me this week, my favorite strikes overall are going to probably be 133 down to 128. I want to get as deep as humanly possible in this support range so that if NVIDIA has some very large and very rapid deterioration of the price right here, I know that we might hit short-term oversold on the hourly and maybe even 4-hour timeframes, but I know as well that we're coming into a very large area of support, which the bulls will probably give us a nice little bounce from. So that's the range for me on NVIDIA, guys. Low 130s to high 120s for this week. That is stock number 3. Another stock in semiconductors that we could possibly be interested in, which is also going to be part of stocks number 3. It's just a pair trade, right? It's AMD. So AMD, same concept as NVIDIA. 113 down to 97 is the support range. The company's valuation is very, very cheap right now in the mid 110s, mid 1-teens range. And overall, if we do consolidate, you can see it's been a very nice area of support for the bulls. Talking about that whole 110 down to about $100 strike. However, I want to be getting cheap on AMD if I do play this company because it is very volatile. Expected move is 112.12 this week. Let's go shopping on AMD and see what can we possibly find below 112. If you ask me my favorite strikes, guys, 106, 105 or lower. You really want to be deep below the expected move and really benefit from that volatility. So if we're looking for 0.5%, half of 110 should be roughly 55. So you can see that at 110, 109, you're getting about 50, 60 cents, which would represent roughly our 0.5% rule. The bear market strategy would be half of that starting at 107. However, if NVIDIA starts off the morning on Monday, red, 1, 2, 3%, maybe we can get better strikes than 110, 109 right now. Maybe you can find some at 108, 107, 106. I want to be getting as close as possible, guys, to 105. I really start getting interested on AMD down here in the 105 range, and that would be a heck of a sell-off intra-week, right? That would be about 7 to 9% from the 108 down to about the 105 strikes. That's the area that I really want to start to play, because if I have the room to DCA several contracts, one would be down there, and then another one would be under 100 if for ever which reason it goes down there. I always try to plan for a DCA. I'm not saying the price is going to go down to there. I'm just saying you also have to plan for a DCA if this is the strategy that you're trying to use on some of your high quality, high conviction companies. So for me, AMD this week, guys, probably like 107 and below is going to be the strikes that I'm targeting, but we need the stock to come down a little bit more for us, right? That's it for stocks number 3, NVIDIA and AMD. They're the 2 semiconductor plays that I'm really looking at the most over the course of this week. Play number 4 is going to be another high quality stock, which is Apple, right? One of the biggest components of the S&P 500. Now we know Apple's been struggling as of lately, especially in their last 5-6 quarters, showing flat revenue growth, really struggling with their AI rollout of Siri, of course, and also having a lot of tariff impacts too. That being said, the price has really done a nice job of consolidating between this 197 and 185 range. So I do still want to play this area of consolidation on this very high quality stock. whenever Apple has some big red days, usually you can find some very nice premium below the market, and it's a stock that is, you know, fairly immune to overall broad market reactions. You won't find Apple on any given day down 3, 4, 5% like other companies can do. It is one of the more stable stocks, despite the fact that it's been struggling to grow recently. At the end of the day, they do a ton of buybacks, and Apple at the end of the day also is Apple, right? So if we can be playing the lower bound of the support range, maybe below 190, that is the area that I really like. So speaking about the expected move on Apple this week, it is 191.43. Let's go shopping on Apple and see how low can we possibly find some strikes on Apple to make sure that if we are assigned, at least we're probably getting the best possible price for this week into some of the consolidation lows. So looking here, if we're looking for 190 divided by 2 for the 0.5% rule, that will be roughly 95. You can see here that there is 95 cents on the bid at the 190s. If you want to go for the bear market strategy on this one, you'd be looking for about 50 cents, and that would probably be the 185s if Apple has a bit more of a decline into the Monday morning session. So for me, the strikes on Apple this week are going to be between 190 and 185. Obviously, if Apple has another 1% drop on the Monday morning, well, then you'll start at 187.5 and work your way down to 182, depending how aggressive or how conservative you want to be on this stock. That is everything for stock number 4, which is Apple. And lastly, stock number 5, we have a pair of growth stocks overall. They're not as expensive as the other big tech names that I've brought to you so far, but they are very high quality companies. Number 1 is going to be Uber. So Uber has an expected move this week of 81.05. That being said, we also understand that the bulls have largely been in control of this upside move right here. Now we're just into some weekly consolidation for this stock. It's had a tremendous rally, but eventually all good things have to come to an end, and we might have to do a little bit of monthly consolidation. Good thing for us though, we've broken out of a very key level, which is roughly 80 down about 78 bucks. You got a lot of EMAs right there, and I'll remind you, prior resistance, which was all-time highs at that point, right, is usually newfound support for the markets. So I do want to be playing a back test in this region, and also the valuation of the company is quite good. So even if I get assigned Uber here between 80 and let's call it 75 bucks, I know that I haven't really overpaid for the stock, and that the bulls, especially if we come deep into there, we might just be getting a very juicy bounce, as the bulls do control the higher time frames, which are the monthly charts overall. Just looking for a little bit of a pullback right now, yeah? That being said, expected move for the week is 81.15. Let's go shopping on Uber and see what can we possibly find around the 81 mark, or possibly below it, preferably below 80, right? 79, 78, 77, as deep as possible. So if we're looking for around 80, I'll remind you, half of 80, of course, is 40. And you can see the 0.5% rule is right there on the bid, which is roughly below the expected move of 81 and change as well. So I would start my analysis on Uber at the $80 strikes. And if Uber consolidates even more on the Monday session as a result of an overall market pullback, well, maybe you can actually find 40 cents on the 79 strikes, but depending how much it pulls back, maybe even the 78 strikes as well. So for me this week, I'll be looking between $79 and $77 strikes, depending how conservative or aggressive I want to be, whether I'm going to use the bull or the bear market strategy on this one. I'll probably be going a little bit closer, trying to get my 0.5%. But for those of you that are just not so convinced, or maybe are expecting more of a pullback, or just don't want to be too aggressive, you can use the bear market strategy on this one there and just go for a bit lower strikes. So for me, it's between 79 and 76. I'll try to get as low as possible on any market weakness to start off the week. And stock number 2, as part of the 5th position in the top 5, is going to be Shopify. In the event that you guys are not fans of Uber for XYZ reason, well, maybe I can present you this stock for some trade ideas as well. This is going to be Shopify. So Shopify, I really like their earnings. We covered them on channel. It showed that their revenue was growing fantastically, and that tariffs were not so much a problem for the company overall. They're doing leaps and bounds in terms of improving their operating margins as well. And they have very high growth rates. Look at their revenue and EPS expansion for the next 2 years. I think the company is positioned to do extremely well, and it's still a decent way away from the all-time highs, about 20%, yeah? That being said, below us, a very nice support, as I said, about $100 down to roughly 91. So we got about a $10 range in which we can be playing, and the 200-day EMA is right down there, 96. That would be taking us into the earnings candle, giving back some of those moves. So if Shopify, I've told myself, if Shopify comes back into the pre-earnings, now that we have updated data, I would not mind playing it, as I do enjoy the growth prospects of the company overall. That being said, the expected move for the week is 100.81. Let's go shopping on Shopify to see where can we possibly find some short puts. right? And how low can we get in that support range of 100 down to 90 bucks? It's a fairly wide one, so we can go a little bit conservative in my opinion. So let's have a look down here. Obviously you're looking in the 100 down to about $90 range. You'll be looking for roughly, 50 cents. So you'll see that the 0.5% rule starts at 98, which is below the expected move of $100 and change, but you can afford to go possibly all the way down here. If you want to play the bear market strategy, 0.25% for the week, that'll be the $95 strike. If Shopify has another 2-3% day to the downside on Monday, be dynamic with your strikes. You'll be able to find 50 or 40 cents probably on the 95 strikes, and this money right here, the 25 to 30 cent range, will probably be moving down to the $90 strikes. So for me, at a first glance, this week on Shopify, I'll try to target as low as I can, but I really like that 96, 95 strike area. It gives us some good distance, and it is fairly deep into the support range, into the 200-day EMA as well. So keep that in mind. That was all I had for you guys for the top 5 options plays, which was actually more like top 7, right? Because in the 3rd position, we had NVIDIA and AMD. And in the 5th position, there was 2 other growth stocks in Uber and Shopify as well. So hopefully you enjoyed all the top 5 and it gave you some trading ideas. Now I got more trade ideas for you. There's gonna be 10 bonus plays. I'll break it up into 3 categories. Number 1, growth. Number 2, some value-oriented names. And lastly, number 3, a couple plays for large portfolios. You guys that are used to trading the wheel strategy with high 6 figures and that can afford to trade stocks that are trading in the $200, $300, $400, $500 per share range, well, you'll want to stick around to the end for those. So let's get it started with the growth segment of the bonus plays. And what I'll be doing for the bonus plays now is I won't be giving you guys the expected moves because you guys are now pros at finding the expected moves, and I won't be giving you the I won't be going through the options chain with you guys. I'll tell you guys what are the areas that I like to play these stocks at, and you guys can do the research on your own. If you need my help, also feel free to reach out in the comment section. But for now, just to run through the plays, the growth segment, 4 stocks. Number 1 is going to be Reddit. We had some good success playing Reddit just last week. I'll pull up, we had a great week last week in terms of the wheel. We've been having some really good weeks in terms of the wheel, but I'll show you guys that at the end. I played Reddit just last week, the 105 puts. They expired pretty much worthless on the Friday section, which was good for us. And I still like playing this region, guys. 105 down to 92. Obviously, you want to try to get as low as possible on red days, but I do enjoy playing Reddit down there. The growth ratios are really good. They've established some nice support overall, and Reddit just has not been moving in line with some other growth stocks that have really kicked it to the upside, like Hims, like Robinhood, like AppLovin. It was part of all of those rallies all the way back here, and now with the most recent rally from the tariff lows, Reddit really hasn't done much of anything. So when we get some nice volatility and red days on it, I'm a big fan of playing this one as close as possible to 100 or under $100 in that zone down there. I think the valuation down there also is a lot more fair than it was once in the $180 to $200 range. Stock number 2 is going to be Trade Desk. So Trade Desk, we also covered their earnings on the channel, and I really loved what I saw. The valuation in the mid $60 range is not that commanding at all. They've been doing a great job at rolling out their new platform, which is more profitable and attracting and retaining more customers as well, with a very nice customer retention rate of 95%. Trade Desk has some really good fundamentals, guys. Great net income and great revenue and EPS growth rates. That being said, we are pulling back into support. That is 72 down to 60 bucks. So I want to play the lower end of $60 if I can. So if I can find some strikes this week, $60 or below, which is about 10% away for the week, I will be interested in playing this one. It does still have some good volatility, and a spike in the VIX early on in the week might just be able to open up some of those strikes for us. Stock number 3, be careful with this one, guys. It's XOXL. I know some of you guys want me to talk more about the 2 and 3 times leverage ETFs, and I don't mind doing so, but just be very patient and be very conservative with them. You don't have to be too close on this. Matter of fact, I would like doing the $16 down to $15. You might say, well, that's too cheap. There's not that much premium down there. Well, if you're just looking at percentage per week, guys, and not trying to be too greedy, understanding that 1% per week on capital employed in the market is very, very solid. You don't have to be going too greedy. You can get all the way down to the 16.5 strike for about 1%, right? 16 cents for $16 strike, that's 1%. That is fantastic. So I can be more aggressive on this one, but not how you think. I'm not playing playing the 20, the 19s, the 18.5s. You can play them if you want to, of course, that's up to you. But if you want to play this one still a bit conservatively, just because it is 3 times leverage, I also have one for this Friday at the 16.5 strike, and I will be looking to maintain that. That is stock number 3. Stock number 4 is going to be CoreWeave. Now, I know what you guys might be saying. CoreWeave is really extended here at the highs, and this is true. Why do I like CoreWeave though? It's because of the implied volatility of the options chain. Myself and a lot of our Discord members have been having a lot of fun milking CoreWeave on the pullbacks with ridiculous strikes below $100 for a given week. So you do not have to play some of these very volatile names too aggressively. If you want to play them aggressively, that's your thing. Be my guest, right? But on the channel, I'm trying to show you guys how you can play aggressive stocks with high IV in still a conservative manner and make sure you get the ROI per week that you're looking for. Of course, if you're riding at the 130 strikes, you're going to be making, $250. It sounds really appealing, but that's like 2% in a week, guys. The chance of being assigned is pretty high because you guys know CoreWeave can move 5, 6, 7, 8, 10% in a day if it really wants to. Now take a look, where's the 0.5% rule? If we're just gonna respect the strategy rules here, right? Look, you can go all the way down here, guys, at the roughly 110 strike and still get almost 0.5%, which would be roughly 55 cents. That's a 2 delta. There's almost no chances of being assigned there. I'm not saying it is 0, but it's a very low chance of being assigned. And how far away is that on CoreWeave, guys? It is literally very, very far away. Just gonna make sure, yeah, June 20th, guys, the $110 strike on CoreWeave is literally 25% away. So you can play these very volatile stocks in a more conservative manner just by getting a lot more distance on your strike prices and making sure that even if you do get assigned off of some random fluke move, at least you're getting a better price than people who tried to play this one very greedy and then just got trapped and now are sitting at a very big loss, right? So keep that in mind. Those are just a few growth names to pay attention to. Now let's move into 3 value names. We're going to talk about value a bit less because it doesn't require that in-depth of the analysis. Value name number 1, guys, is going to be PGR. PGR, extremely high quality, high conviction name right here. Obviously, one of the largest insurance players on the entire planet right now. The region that I really like for PGR right there is about $260, down about 250. Very nice support area, as you can see on the chart. Extremely beautiful support area. Very solid fundamentals for the company overall, just in a phase of consolidation. So a lot of our members as well are playing PGR. Probably this week as well if we get some declines into the 250 range. I know it's a bit more expensive, but it is also a good stock with very solid fundamentals, nothing fancy here. Another stock that you can argue is now value is PayPal. Why do I put it in the value category? Because it's not a growth stock anymore. The CEO is very vocal in saying they're not looking for top line growth anymore. Revenue is only going to grow 6.5% for the next 2-3 years. Is that a growth stock? Probably not, right? But what they are doing is they're bringing a ton of free cash flow yield here to shareholders, which means they're doing a ton of buybacks. The buybacks already are going to be 17% of the float. So this one is going to be a cash flow monster. They're not looking to expand. They're looking to retain membership and just retain that total payment volume. That being said, PayPal is at a very nice area of consolidation. It's the lows of the last like 3-4 years at this point, right? This whole 68 down to about 59 area. If I can find PayPal in the mid 60s, I do not mind playing this one on the wheel. And now lastly, another value company, even though it is growing, it's not a tech company, but it is a very solid company nevertheless. It is Decker's Outdoor Brands. I think this company is positioned better in terms of not brand awareness, but brand sentiment. It's between this one and Nike. The reason I like this one better is because their products are growing a lot better. Domestic and internationally, all of their product lines are growing a lot better than Nike's products, and they do not have the inventory buildup problem that Nike is currently facing right now. That being said, this stock as well is down 54% from their all-time highs. They're not trading that rich, guys. The market cap is 15 billion. And if you take a look at their sales for the next couple of years, you'll see EPS, no problem here. The company's doing fine. Revenue, no problem here as well. They're trading about a 3 price to sales right now, which is good. The reason that they dropped right here after earnings, only tariffs. Their earnings were really good. I actually covered them here on the channel too. Very good earnings, but they gave guidance, kind of like Lululemon. They said, you know what? We may have to take up to $150 million tariff hit. And since then, the stock has been really sluggish. That being said, if I can find Decker's Outdoor Brands mid 90s down to about $85, that is prices that we haven't seen since early or late 2023. And I would not mind picking up this company there. Those are just a few value names for you guys if you were interested. Lastly, some plays for the big accounts. We got to talk about Visa and MasterCard. Visa was down 6.5% on the Friday session because of stablecoin news, guys. This news has come out tons and tons and tons of times over the past 2-3 years. It's always been a buying opportunity for Visa and MasterCard, some of the highest quality, highest conviction names in the entire market. If you cannot buy Visa and MasterCard on dips, guys, I don't know what you're doing. They are some of the highest quality, highest predictability stocks in the entire market. Fantastic cash flows, fantastic net margins, and very wide moats. That being said, if you can find some strikes on Visa, as we did in our group, 340 down about 330 into next week or the next 2 weeks, I'm a very big fan of playing Visa, and I'm a very big fan of playing MasterCard as well. If you have a very large account, you want to be getting into high quality, high conviction stocks. So these should be your bread and butter when they become available. On MasterCard, if we drop a bit more, I'll remind you the levels here. 540 down about 523, decent line of defense support all the way down there, coming in the 50 weekly EMA and coming into the 200 daily EMA as well. Very solid areas for those stocks, all things considered. Stock number 2, which is, stock number 3, I guess you can consider, Berkshire. If we cannot buy Berkshire on dips with big accounts, guys, it's the equivalent almost of buying the SPY, right? If you cannot write puts on Berkshire, I don't know what you can possibly write short puts on, right? What are you going to do? Write $100,000 of puts on SOXL if you guys want to, right? But if you're more conservative, as you have a larger account, Berkshire should be front and center for you guys right now, coming into prior resistance, which is going to be current support, and the 200 daily moving average. That is 485 down about 470. Try to get as low as possible into the support box. Has it been a good proposition to buy Berkshire when it comes into its 200-day EMA? I don't know. Let me pull back the chart and you will see, right? There's only a few times in the past 5 years, other than COVID, that it comes down into the 200-day EMA. Traditionally, it's a fantastic buying opportunity when the stock makes its way down into there. This is the 2022 bear market, right? When you're in a bull or slightly bullish leaning market, one in which EPS is not crashing all across the board, you can go back in Berkshire's price action history all throughout the years, and you can see, yeah, it's probably been a good buying opportunity to be doing some of the wheel trades on Berkshire in around those levels. So that is my proposition for the large accounts. Visa, MasterCard, and Berkshire, very high quality, very high conviction names, especially leading into this week where the macro could get a little bit tricky and a little bit more volatile than not. With that, that is everything I had for you guys for the top 5 and for the top 10 bonus plays. Hopefully you guys enjoyed that. Obviously, there's many more plays in the market, but I figured that I should bring you some of my favorite, my 15, 17 favorite ones, actually. If you enjoyed today's video and it gave you some insights and some ideas, consider dropping a like. Would really appreciate it for the growth of the channel. If you are new to the channel, consider subscribing. We do these videos every Sunday in preparation for the upcoming week. I would highly consider watching the channel, especially if you're a fan of writing premium in the market using options. It's a lot of what we do here on the channel, but we also do many directional plays such as call options and all that good stuff too. And lastly, if you have any questions on the strategy, any stocks to play, on the overall macro, on the sentiment of the markets, feel free to leave them down below and I'll help you guys as best as I can leading into this week. And lastly, in the event that you wanted to participate in a group of traders and investors such as yourself that grow our wealth in a stable fashion over time, not YOLOing in the markets every single week. No, consistent gains, consistent winning trades, and building not only a trading account, but long-term portfolio positions as well. You might consider joining our trading and investing group, in which we specialize in running this wheel strategy as with the bulk of our portfolios, right? We don't only do that, but we do a lot of it. You get access to all my trades in real time, which are, whether those are the wheel trades, the directional trades, some lottery trades as well that we do, some shorter duration directional bets, right? Here is some of the trades that we've been making in the past 2 months. Wheel trades, as you can see, for the most part, all usually go according to plan for the most part, right? There are obviously some losses, which is why I'm always transparent on the channel with the wins, the losses, and everything in between. Suffice to say, you get access to all my trades. You also get access to our private morning live streams in which I trade live and take all your guys' questions for the first 2 to 3 hours of the market at the open. Feel free to ask me any questions on your stocks, your options, your long-term portfolios. Always glad to help you guys out. If you can't be there, they're recorded thereafter, or you can ask me all your questions in our chat rooms all throughout throughout the day, and I'm very quick to answer there as well. You also get access to our private videos where I explain a lot more in detail, not only about this strategy, but other option strategies that I use that you guys see me do on the channel very often. Technical analysis video, fundamental analysis video, how to grow an account from small or medium or large, what portion of the account should be in which trading strategy to maximize the best risk to reward and really, get you guys confident and consistent. So a lot of very good private videos in that section there as well. And lastly, but not least, guys, you get access to all of my watch lists. So the options watch list that I use for the wheel and all my directional trades, all the watch lists that you see and all the charts, you get to copy paste all my watch lists, all my charts in 2 clicks of a button. It comes with all the technical analysis. You just copy paste. You get the same charts as me whenever you guys see me do technical analysis, support resistance boxes, and a lot of the fundamental analysis, right? Whenever you guys see fundamental analysis annotations on like 200 companies by now, it just comes copy pasted onto your chart as well. It's just an added benefit that I threw in there for our members. If anything, if any of that sounds good to you, the link to join our group is down below in the video description. So hopefully I see you in there soon. And if not, I guess I'll see you guys right back here on the channel. Take care. That's it for me. Did a little bit of a longer video because I didn't see you guys over the past few days. Been traveling a lot, but I will be back home come the Friday session. So we'll get back to normal schedule. Hopefully you guys had a good weekend. I'll see you guys throughout the week. Take care. Have a good one. That's it for me, and peace.